Okay, quick review on today's trading, what I was thinking with Adobe, and what I learned, takeaways today. Just experimenting with this option screener here, and Adobe popped up as a big bearish screen on the screener here. So looking at the earnings that came out, the fundamentals, essentially it reported better than expected earnings, but the market didn't like the fact that the AI component was kind of undefined. And so for 2025, their projections were not as good as expected, I guess. Specifically, it says the digital media growth in the midpoint growth, digital media revenue growth of 9% and 11% respectively, both missed analyst estimates. So I don't know, this seems like an overcorrection to me. It could be wrong, but from 542 all the way down to 470, 70 point move. So I did see that this was testing this 475 level, which was a previous low back on November 1st. And so I acquired some calls there. And I was just letting this play out. We initially broke down to the 470 level. So I bought in around here, 475. Broke down to 470, still holding. Rode it all the way back up to 479. I was up about $500 here across my Fidelity account and the Thinkorswim account. Ended up taking an L on the two positions, but looking at the options chain here, you can see pretty low IV because we're after earnings. So 46% IV after earnings for tomorrow's options with this big of a move is pretty decent. We've got an expected move of $9. Okay, so at the 475, if we're expecting a move of $9, this $4 call here is kind of trading at it. Looks like it's trading at a discount if we were to move that $9. So pretty substantial discount here based on the volatility crush that happened. So I don't know that we're going to get back up to move 9 points tomorrow, but I don't think that's out of the question considering we moved 75 down. So yeah, I was looking for a 10-point move today. We got 5 of that, so we got half of that. And my idea was to buy two call options, and sell one with enough profit to pay for the other option, to hold that option overnight. So the first part almost worked. On this one, it got up to about 350, 375, so about 50% profit. I was looking for 100% profit on this particular contract. So was just about to close here on my Fidelity account and lock in some of that profit. And then we started to come off the that 480 or 479 price. So may have been a little too ambitious with the profit target, but I still feel like there's a lot of room. If this 470 does hold and we get a close above the 475 here tonight, I feel like there's a lot of room to retrace back here. But in the future, looking at what I could have done better, using these Mentor Q momentum indicator here, you can see it puts the Fibonacci levels on for you. And on the 2-minute, I believe, yeah, we retraced up to that 618 level, Fibonacci level, and also this moving average here, the 100 moving average. So this would have been a good spot to take profit off of the buy on 75. I held through 5 points. I was looking for 10 points, so this was a 2-to-1, risk to reward here. So if we had got that move, I would have been looking for a move back up to the 1-day minimum and put support. So right about that 584 level, which would have been $9. So that's in line with the expected move that we saw on that option. It was expecting this to close at put support at least, or 1-day minimum. These are the intraday levels here. And then we have the daily levels as well. Which are different. So Mentor Q is good. They give you these intraday levels that can be updated here. But you see how much resistance we've got here up through past that 580, back up to the 500 level. There's a lot of resistance here if we're gonna move up tomorrow. So we'll see what happens overnight. If we can get back through this junk, then we've got a real chance of moving, closing that gap back up to the 550 level. But anyway, so I'm holding one contract in my Fidelity account, the Friday's 480 call and 475 call in my Thinkorswim account. So see what happens. May regret holding on to these, but it's not often that this dumps 14%, 14% on Adobe. It's like the Edgeful overnight continuation here, red overnight. Generally the next day it looks like there's a 62% green day. So in the past 6 months, let's see, 5 years, what it says, 54% green day the next day. So on the 5 years. So but year to date looks like that just depends kind of what happens here. Friday's usually not. Earnings performance. Let's see what happens here. So yeah, you can see we're way outside the standard range here for earnings performance on Adobe. 3% is the average, minus 2.88%. So about 10% over that. So it's like the biggest gap down here was 20%, November 15th, 2022. And after earnings, it was down another 5.5%. So I may be way off on this, but we'll see what happens. And I'm comfortable with the amount that I'm risking here between today and tomorrow.